All right, guys, it's Monday, and you know I love Mondays because that means the market is back, baby. And right now we are up across the board. The S&P's up around 0.4%, QQQ's up 0.75%, the Dow's up around zero point 0.1, zero point 0.2. All right, the Dow's slacking a little bit as the Russell is down just a little bit, ever so slightly, pretty much at break even. But overall, guys, stocks are moving and we have to break them down. And we have 5 in particular that I want to go over in this video, all of which are reporting earnings this week. You guys have to pay attention. We're going to break down the estimates, the charts, what I'm looking to do. So let's dive into it. Hit the like button, feel free to subscribe, and let's talk. So right now, again, we're pretty much up across the board. If we're just looking at the S&P and the NASDAQ, we're up a good chunk. S&P's up, like I said, 0.4%, as QQQ's up now over 0.75%, and it's pretty obvious what's going on right now as I'm making this video, guys. We are pushing to the highs from Friday. If I draw this trend line out on SPY, pretty clear and simple what's going on. We saw a pop on Friday morning to 652. We then saw the drawdown, pretty sharp drawdown at that. We went from 652 down to about 643, and that's where we consolidated for the rest of the day on Friday. And now we're starting to bounce off of that point. You guys can see it, or not even off that point, but we're making a higher low, essentially, recovering a good amount of the losses from Friday morning. So this looks like we're well on our way as of right now, as I'm making this video. Kind of looks like SPY wants to go back to that all-time high, 652. Maybe it wants to break out, or maybe it does break out. We'll see. And QQQ, let's pull this up. You guys can see the same thing's pretty much playing out here. It actually already played out. It played out already. You can see on Friday morning, QQQ hit 581. It drew down to about 571, $10 drop, 1.6%, guys. And now we're back to 580. Just like that, we're back to 580, and we essentially filled that entire gap. And at this point, man, this is the moment of truth. If QQQ can break out of 581, we're right there right now, up. We're up 0.8% now, pretty much. If we're able to get out of there, which, if I had to guess, I think it's going to break out. It kind of looks like it wants to. We have an ascending triangle. You see that? If we get out of 581, 582, this is probably going all-time highs, considering all-time highs are 583.32. So, yeah, we're looking hot, guys. Stocks are looking good on the indexes. And, this is, even though September is historically a rough month for stocks, it's not looking that bad right now. And probably a lot of that's because we sold off in August. We kind of front ran the move, or we saw, I don't know what you want to call it, maybe a false start. I don't know, but we saw the sell off in August a bit here in the market, and now we're just more so consolidating, kind of just bouncing in a range here, trading in a range, but it's looking good, as of now. And to start off the week, what more could you ask for, right, guys? So let me go over these 5 companies, 5 stocks that you need to pay attention to. Number 1 is Adobe, ticker symbol ADBE, which has not been doing well. Adobe stock is down. Well, on the day, it's up 1.2% on the day. But over the last couple of years, it's been rough. Particularly since the beginning of 2024, it's been in a straight downhill line, guys. No joke. I mean, this thing is down 45% since 2024, January. And we can see the all-time high is $700. We hit that pretty much in November of 2021. Close to 4 years ago. So Adobe is one of those that, I used to want to own it a ton years ago. Never really bought into it. And at this point, man, I'm just watching it. I haven't ruled it out yet completely. But even here at 350, I don't think it's worth the price. I would love to see it. If we see it in the mid-high 200s, all right, now we're talking. But here where it's at, I still think it's vulnerable for more downside, and the chart shows it clear as day. What is this, guys? This is a descending triangle, a bearish pattern which clearly we're making lower highs into this support at about 330. We're at that point now pretty much, and if earnings are bad, if guidance is bad, this could run through 330 and we'll be in the 200s, high 200s. There's a chance that happens. That's where my head's at. So I'm holding off for now, even though this could rip maybe in the other direction, and I might regret it. It is what it is. I'm holding off because I don't want to buy the stock until the 200s, and that's that. And when you're in the market, you have to have price targets, guys. Have levels where you're going to buy a stock, sell a stock, and don't budge really. I mean, maybe budge a little bit. If my target for Adobe's 250 and it gets to 265, all right, maybe I'll buy a little bit. But if your target's 250 and we're still at 350, maybe sit still a little bit. Be patient. And that's kind of where I'm at. So EPS, analysts have them doing $5.18 versus $4.65 from last year. And I almost forgot to mention, I think their earnings are on on Thursday. Let me double check that. Yeah, it's on 9/11, guys. 9/11 is on Thursday. After the bell, we're going to get Adobe's numbers. So again, 518 EPS is what analysts have them doing versus $4.65 from last year on revenue of $5.91 billion. Let's see here, versus $5.41 billion from last year. That would be up 9.2% year over year. Not bad growth, but it's just not what it once was. Adobe is not that, crazy growth story that it once was. And now with AI, it's kind of putting a bit of a damper on their business a little bit, AI as a whole. That's kind of a broad statement there. But I know they're integrating AI into their, services, right? And don't get me wrong, people are still going to use Photoshop, After Effects, Premiere, all these Illustrator, all these different services. But AI, I mean, it is a risk for sure when it comes to businesses like Adobe. I mean, I can literally just go, it's crazy. I've been doing YouTube now. I'm not like a huge YouTuber by any means, guys, but I've been making content for, 7 years now on YouTube, right? Or 8 years, however long it's been. And when I first started, it was pretty hard to make a nice thumbnail. You'd have to go on whatever, Photoshop, and you'd have to have some like serious skills to be able to, cook up a nice thumbnail, or you'd have to go on some other platform, whatever. But nowadays, man, you can literally just go on ChatGPT if you're paying, for whatever service you're paying, right? And you can just be like, yeah, make me a thumbnail, blah, 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 and it pops it out in 5 minutes. So if you're telling me that has no effect on Adobe and their stock price, you're kidding yourself. It's definitely a risk. And we'll leave it at that. And that's kind of a risk overall as to why I might not buy the stock. The thing is, will Adobe embrace AI enough to where it really helps their business, or will it be the end of it? I don't think it will be the end of it. Will it be a slow death? I don't think so necessarily, but these are all risks that you have to think about when you're going to buy a stock. So Oracle, ORCL is another one. They're on, let's see what day they're on. They're on the 9th. So they're tomorrow, Tuesday after the bell. Oracle, analysts have them doing $1.48 versus $1.39 from last year, EPS wise. And revenue, the estimate's $15.04 billion, guys, versus $13.31 billion a year ago. So that's up 13% year over year, their revenue. So Oracle, guys, man, this stock has been quite the opposite of Adobe. I mean, this thing is up from $118 back in April. Now it's at $240. We hit $260. So we were up well over 100% at one point. And Oracle's long-term stock chart is an absolute beauty. I mean, look at this max chart. Look at the 3-year chart. So they've been executing, right? They've been doing very well. So the question is, will that continue, right? And on the 4-hour chart, we can see, there has been a bit of a sell-off since the all-time high, down about 220. Now we're running into earnings. The question is, are we running too much into earnings? Are we getting a little too hype to the point where, oh, maybe earnings disappoint and we fall back to the bottom of this channel? Because, guys, we haven't broken out yet. We're up 3% on the day. We were up on Friday. Momentum's building up, but we're not fully breaking out of this channel, as you can clearly see. So don't get too excited yet for Oracle. And I'm not a big earnings trader, so I'm going to just wait, see how earnings look. If it breaks out, beautiful, awesome. We'll see where it goes from there. But keep your eyes on Oracle. GameStop is another one. GME, you forgot about GameStop, didn't you guys? Maybe some of you did. I tend to forget about GameStop too, I'll be honest. The stock's been flat for months. The stock hasn't done anything really since the beginning of June. I mean, geez, man. Been flat in the low mid 20s for a good little bit. And earnings are also tomorrow after the bell, Tuesday. So, yeah, I have a lot of water on deck here, guys. Guys, so if I'm clearly, choking on camera, it's because I need some water, all right? So GameStop is tomorrow after the bell, and, it's GameStop. Come on. I've been vocal about this stock for years. I'm not a fan. It's a dying company. We all know it. The big squeeze is not coming. But, hey, now they're doing this Bitcoin strategy, which kudos to them. But the reality is, it doesn't hide the fact that their business is deteriorating and has been for, a decade and a half now. So GameStop, their EPS is 16 cents. That's what analysts have them doing versus a penny from last year on revenue of $823 million, man. They're still doing almost $1 billion of revenue, which is nuts, versus the $798 million from last year. It's only growing 3%, but they're still somehow making on the top line $820 million. That's wild to me. But that's where it's at, up 3% year over year. And, at this point, who knows what wild card GameStop's going to pull out. I have no idea. If it breaks out at $23.75, $24, $25, that's the big breakout spot. I would say $25. If it's able to get out of there, man, we could be going a lot higher, but I'm not touching it till then. I'm playing it with caution. I'm not in it right now. I haven't been in it in, maybe a year. When was that GameStop or the recent craze, when Roaring Kitty came back? That was, I think, last June, right? Man, it's been about a year since that. That was the last June 24, June 2024. So since then, I've kind of been out of the loop a little bit. I don't really care about meme stocks, guys. If I'm, messing around with, if I'm gambling or, on speculative investments or whatever, I'm going to the crypto market. I'm not messing with GameStop. But anyway, Chewy, another one that Roaring Kitty was affiliated with or owned. I don't know if he still owns it or what. I haven't been keeping up too much. But Chewy stock's been on a run, man. This stock hit $50 about, 3 months ago, early June. We then drew down to about 33. Now we're breaking right back out. The 4-hour chart looks good. The 1-year chart looks good. The 3-year chart, clearly we're breaking back out. Golden cross, the whole 9 yards. Excuse me, guys. So analysts have Chewy doing EPS of 33 cents versus 24 cents from last year on a revenue of $3.08 billion versus, $2.86 billion from last year. That's up 7.7% year over year. Not a ton of growth there for Chewy, but we'll see, man, what guidance looks like. I'm pretty sure they reported, last time the stock cratered after earnings, but that was pretty predictable. I'm pretty sure we called that out. It was priced to perfection at that time. I mean, guys, look at Chewy's chart heading into last time they reported. It went up in a straight line, literally, and it tanked because earnings were not up to par, or not as good to keep the stock at that level. And now clearly we've started to reverse. And we kind of have an inverse head and shoulders here. Keep your eyes on that. So if Chewy does well, man, we could be getting ready to move higher. And last but not least, guys, and by the way, hit that like button. Make sure to subscribe if you stuck till the end. Follow along for more content. I appreciate you all. Kroger is, I forgot to say actually, what day is Chewy? Or did I say Chewy? They're tomorrow, right? Or maybe Wednesday. Yeah, Chewy's on Wednesday after the bell, I believe. Or no, they're in the morning. Chewy's in the morning. And then we have Kroger in, I think they're in the morning. Yeah, they're on 9/11. They're on Thursday in the morning. And this stock's down a good chunk, $5-6 a share heading into earnings, about 9-10%. And this channel that we actually drew out last time we covered the stock, I guess, I just extended it to the right. It kind of looks like, if I redraw it a bit, it looks like we're still holding that. If I pull up this 1-year chart, let's see if I get the channel tool out. Let's see if I pop this one up. Yeah, check that out, guys. Pretty much right there. So we are oversold heading into earnings. The RSI kind of looks maybe a little bullish divergence in the making here, a little bit, but keep your eyes on Kroger. $1 EPS is what analysts are expecting versus 93 cents on revenue of $34.12 billion versus $33.91 billion last year, up 0.06 or 0.6%. Pretty much nothing, guys. Don't expect anything crazy out of Kroger, but watch it. Chart looks good. Ticker KR. And yeah, with that being said, I'm going to wrap up the video. Let me know your thoughts in the comments, guys. And if you want to, be a part of the Patreon, see me build out my real portfolio. We're investing a bunch of money a month, buying stocks, trading options, doing all that. Full transparency, that's on Patreon. If you guys are interested, linked down below. And with that being said, cheers. I'll catch you all in the next video.